Okay, so equity skews catching a bit of a bid. Brett's turning negative as we enter this potential window of weakness. So if you want to have a look at this chart, we've been mentioning the VIX flows over the last couple of days. They seem to have triggered a bit of an uplift across the whole of the equity vol complex. Bear in mind that the S&P is the major benchmark for all equity vol. Everyone measures their levels of volatility based on that benchmark. So if equity vol in S&P is going up, it's probably dragging a lot of other things with it. I certainly, from trading vol in Europe for 20 years, I cared a lot about what S&P vol was doing, and therefore market makers would adjust prices if S&P vol moved around, etc. So you can see the SDEX here, it's a chart that kind of measures what the skew's up to. Obviously has bounced quite a long way off the lows that it made in December, and it is back to, I wouldn't say it's crazy elevated levels, but certainly has had a decent bounce there. And that's because people are having to buy downside options to protect some of these VIX calls that have been sold. That I think is the main driver. Now, another potential indicator of a weakness is the fact that market breadth has turned negative. So just see it going into the red here. This is a chart that I found on Twitter. And basically, what this chart is pointing out is that when you have prolonged periods of positive market breadth and then it turns negative, then these can often be the kind of beginning of a more meaningful pullback in the market. So that's something we should watch out for, because right now S&P has barely pulled back. So we've got negative breadth, we've got vol and skew catching a bit of a bid, and basically it's saying we are ripe for a move down. And this window of weakness that we've been talking about could well be starting now, that VIX expiry is this morning. And often VIX expiry does mark a bit of a low point in volatility. And so for the next 2 weeks, you certainly want to be a little bit cautious and make sure you're not overexposed, because the probability of some sort of correction has probably gone up based on what we're seeing. Okay, we did send out to subscribers a notification. We put on some VIX call spreads yesterday because we do think that probability of a bit of a vol spike has risen. We like the leverage that the call spreads give us. We also think they do a good job of controlling the theta bleed if a move doesn't happen. And like I said, VIX expiry, I had a good chat with Spot Gamma on their YouTube channel and on Twitter Spaces yesterday, saying that VIX expiry this morning may well be the last bit of support that gets pulled away from the market, and we could start to move down. Now, we may well get some support into Friday's OPEX as well if we do trade down, and there are a lot of long gamma strikes around, which will show in the fixed strike vol monitor that it does suggest that people are long January, but they've been taken short behind that. And that's why we think we may get some shenanigans starting next week as the January options all roll off. And the S&P has been kind of ignoring what the bond market's been doing, right? Bond yields have gradually been backing up on every piece of news that we get out of the Fed speakers, etc. And yet S&P doesn't want to budge. So we think it may well be that S&P is being overly supported by some of these options markets, some of these option positions. And once they go, we can have a bit of a catch down in markets. And we've seen that happen many times on options expiries in the past.